All right, jumping back into it, Urs. We're happy to be back. Diving right into the numbers, we're looking at the interest rate that happened in Japan.
Yeah.
That was quite interesting to see. After this, we'll eventually get into some of the numbers coming out of the US in terms of inflation and GDP growth. But Japan kept it the same. It was quite interesting to see that they didn't raise their rates, but at the same time, they committed to continue buying back government bonds. Did you see anything interesting there that you think is valuable?
I think the reaction or the decision of the Bank of Japan was pretty much expected this way. It is also interesting what an effect it still had on the currency. The Japanese yen has depreciated the most within like the G7 currencies. So it has lost about 6-7% this year or even more. And now even more again. So it's around 156, which is a 34-year low. And the question really now comes up whether the Bank of Japan will intervene and will start to take measures to bring the value of the Japanese yen up a little bit again. Because at the end of the day, even so, and we have discussed this in previous episodes, a weak currency can be beneficial to your exporting industry, which Japan has quite a bit. It can also lead in quite some suffering, especially when it comes to importing stuff.
Yeah, and even foreign direct investments.
Yes.
If you know your currency is losing value, those international investors might be a little bit more wary to invest in the country because they're not going to necessarily get a return out of it totally. It's a bit of a mix there because if it's a cheaper currency, then they can maybe do things less expensive there and import it back to their country, but it can definitely have effect there as well. So with that, I think it's interesting to look at. Moving over to the U.S., we saw the
Personal
personal
consumption
consumption. Oh
expenditure.
my gosh, that's so bad.
It's a
Wow,
personal consumption
butchered
expenditure
it.
index.
Yeah.
Yeah. The personal consumption expenditure index was up 2.8% on a
Yep.
year-to-year basis. The interesting thing already yesterday was on Thursday, there was the same number coming out on a quarterly basis where it was up for the first quarter 2024, it was up 3.7%. And there you see quite a jump from the last quarter of 2023 when it was on a quarterly basis, was up 2%
Yeah.
annualized. And so this worried investors already. And you could also see yesterday when you followed the markets that they started with quite a bit of a correction. Later on, they regained some of their losses again. But you see in general like that the environment in the markets has become much more challenging in the second quarter this year. So the first quarter has been outstanding, but since the beginning of April, really markets started to struggle, even though there are still positive reportings, positive earnings coming out. But there are also more numbers as this PCE coming out, which are worrying for the consumers and for the investors.
Yeah, and it's again, inflation in any aspect is something that the Fed has been fighting or saying that they're fighting, but it continues to remain quite sticky. And often in their battle against inflation, PCE was one of the numbers that they said, hey, it's coming down, it's looking all right. And now we see this fairly large jump in such a short time.
Yeah, and also like the forecast for the year-over-year number was 2.6%, so it's 0.2% higher than what was expected, and that might not seem like a huge difference, but it is quite a bit higher than what the expectations were, and we have to keep in mind, and we will also talk about this next week. Next week we will have the FOMC meeting where the Fed decides how to proceed with the interest rate. And they always said that, and stressed even, that the PC is an important number they take into consideration when making the decision.
Yeah, and so we see that jump. I mean, as there's been signals before that they're going to kick back another interest rate drop, I think we'll see it again. Interesting there was, again, we'll get into this, but even comments that some politicians had about how the Fed is independent, but maybe they should start lowering the rates. So, we'll see what comes out of that. But it is certainly interesting to see where inflation, even when it was going well in certain areas, is not going well anymore.
And I think also in this regard with the PC, which is also a measure for inflation, is even though it's stickier on the same or on the other side, we see GDP growth, which we are going to talk now, which was quite a bit lower than what was expected for the first quarter.
Yeah, which is quite concerning. It came out at 1.6%.
Yes.
And I'm pretty sure they were forecasting like 2.8%. It was really high. I mean, it's well with under 1% of where they forecasted it. And especially looking at the past 2 years, it's the lowest quarterly GDP growth since the contraction in the first half of 2022. So we're talking about, a serious slowdown, especially the last 3 quarters. If you look at it, you see this constant, downsliding of the GDP. I thought one of the interesting numbers there was government spending was actually down quite a bit in the beginning of the year. So to see that also GDP goes down when government spending is down, that's not the only reason. There was a lot of other reasons. Even personal consumption was down a bit. I think the cracks are now starting to show a bit more, not just on the surface, like not just under the surface level, but now on the surface level.
Yeah, and I think that's something, or that for sure is something we criticized before, that a lot of the GDP growth was coming from this Inflation Reduction Act, CHIPS Act, and so on. When the government starts financing projects like boosting demand, this has a positive impact in a way that inflation will increase and it will hurt people.
Yeah, and it will also increase GDP. If the government's spending and there's more money in the market. So it's not only increasing inflation, but GDP looks good. And now we see kind of that inverse where GDP is falling, inflation is starting to rise again. And there's going to be some serious challenges, facing not only the Fed and their monetary policy, but the fiscal policy of the US government. And it sets up for quite an interesting lead up into this election year and what it will mean. Will the markets play a role in, if the markets continue to correct and they correct at a harsher level, will that play into the Fed's decision next week? I think it's becoming more and more complex, and it's a harder decision to make as they kick it down the road. I think it's the right thing. I don't think they should raise interest rates, but it'll be interesting to see with all these numbers starting to really turn a little bit more negative.
Yeah, and it will be a harsh decision as well. If inflation stays high, then you should better keep the interest rates at the level. But if you have weak growth, then you probably should or lower it. So we'll see where this goes.
It'll be really interesting to see. I think just before we get into what we're going to talk about next week, there's some interesting numbers coming out of Germany. Their unemployment rate was at 6%,
almost 5.9%. Which is the highest since 2015. The interesting thing there is we have talked or covered Germany in previous periods as well. They had pretty weak growth in the last year. We're even in a recession, and even so they were in a recession, unemployment was still relatively low, and now they're starting to get out of a recession in unemployment figures rise, and this could also be kind of a warning sign for what is going on in the US, where unemployment rate is still very, very low. But we are also still having a positive growth. And if there are some things changing, maybe in a later stage, there will also be unemployment, which will be affected.
Yeah. So next week, we're going to be covering, as you mentioned, the interest rate decision of the Fed.
Correct.
We'll also be looking at the GDP growth of Germany and the Euro area. There's a lot of data coming out of the Euro area, but we'll focus on GDP. And if there's any interesting numbers, we'll cover that as well.
Wonderful.